My name is Wikus Kruger. I'm a researcher with the Power Futures Lab, which is based at the Graduate School of Business at the University of Cape Town. And I'm going to be discussing two topics interrelated. The first is private power investment trends in Sub-Saharan Africa. And the second is expectations around the Renewable Energy Independent Power Producers Procurement Program, or REAP, and the reforms required within these programs. So let's quickly look at what the major trends are in power investment in Sub-Saharan Africa. The first is that we've seen a recent increase in investment into the sector. You can see from about 2010 onwards, we saw an acceleration of investment. That's notable, but it's not really enough. The gap remains considerable, and especially in terms of electricity access, energy security within the region. And so much more investment is needed. If we look at where this investment and the growth of investment has been coming from, it's mainly been two sources. So the first is private investment, and that's in the form of independent power projects, or IPPs. And the second is China. If you look at these lines, the blue line includes South Africa. So if we exclude South Africa and the reprogram for that, it looks pretty differently. But the general trend is that public sector investment, meaning from government or utilities, has generally stayed at levels that haven't changed, whereas private and Chinese investments have increased. Let's look at this a little bit more in detail. So the gray blocks represents projects from Chinese funders that reach financial close. We list the projects by the year that they list financial close, or reach financial close, sorry. So China plays an immense role. You can see that especially from about 2009 onwards, South Africa's program has made a considerable contribution, and if you take that out, the picture changes quite a bit. And the other notable trend is that there has been quite a chunky bit of investment coming into IPP. So historically, it's mostly been larger gas plants, even some hydro. These are generally bigger projects that take longer to commission, longer to negotiate. And so the trend has generally been for these investments to come in kind of chunks. That has changed. So I'll discuss that in the next slide, but let's just quickly look at where the investment has gone. You can see that it's spreading around the continent, but generally it's concentrated in almost a handful of countries: South Africa, Kenya, Nigeria, Ghana. These are the main investment destinations for IPPs, and we'll look at why that is. But there has been a large number of countries that have opened up their markets now to IPPs. And as a result, we see IPPs starting to make a notable contribution to installed capacity in the region. So going back to the point I made earlier, so historically, most IPPs have been based on technologies such as gas and even hydro, coal, diesel, quite a lot of heavy fuel oil based projects. That has changed. So in the since 2010, and especially in the last 5 years, we've seen an increased acceleration of renewable energy based projects. And there are several reasons for that. One, obviously, is the fact that renewables have become much more cost competitive and actually now represent least cost power options in many countries. The other is that development finance institutions play a really prominent role in the financing and de-risking of most IPPs in Africa, and they have shifted their funding priorities to renewable energy-based projects. And so that's these two trends have combined to bring in much more investment into the renewable space. And so most IPPs in the past few years have been smaller renewable energy-based projects that have been commissioned in shorter time frames and usually at relatively low costs. And this just gives you a breakdown in terms of what the technology mix looks like. This is by project, so not by capacity. Capacity, if we were looking at this in terms of capacity, it would actually be gas would still be a dominant technology. But if we just look at the number of projects across the entire spectrum, so that's projects from 1990 up to now, or up to the end of 2020, most of that's now solar PV, followed by gas and hydro, and then some wind and geothermal coming on the sidelines. So let's just look at 2020 quickly, because it's been an interesting year, and we found some interesting trends when we looked at the data. The first is obviously that COVID had a significant impact on the sector. Unsurprisingly, there were a number of projects that were not able to reach financial close. We tracked about 70 projects that were planning to reach financial close in the year. These estimates are always, we find overly ambitious, but only 13 of those managed to reach financial close. And most of those were solar PV, although we see some gas capacity coming online as well. It's encouraging that many of these, or at least some of these IPPs, are in countries that have no historical legacy of private power investment. And so that signals an opening up of the market, even in really difficult circumstances. Second major finding is that there have been construction delays. Again, not a surprise, mainly due to lockdown regulations and then supplier problems, mainly out of China with equipment, but also other value chain issues. And so we see about 18 projects, most of them from South Africa, reaching commercial operation. But then there are several other projects spread throughout the region as well. And in general, COVID-19, I think, has emphasized the fact that the private sector has an important and an increasingly important role to play in investing or in financing new power generation technologies or investments, mainly because the public sector now has to redirect a lot of its spending towards just dealing with the fallout and the actual pandemic. Other two trends that we noted, so I mentioned this briefly, but gas-based projects, so closed cycle gas turbines, that's increasing again. We saw very little investment into these technologies in recent years. That's increased. I think we have 3 projects closing in 2020, but it's not clear for how long this trend is going to last, based on the economics of the competition, notably renewables, but gas is a really nice complementary source to many renewable energy projects, and so that's encouraging. The second is that there's been a resurgence in Chinese investment. We saw quite a significant dip in the last 2 years in Chinese lending to power projects, and it's generally coincided with a general kind of cooling off of Chinese lending into the African continent in general. And so we're seeing a bit of a resurgence there, although it's not as strong as we did before. Some further findings from 2020 is that African development finance institutions have become really prominent players in the sector. Primarily the African Development Bank, but also the West African Development Bank. They're providing loans to 7 of the 13 IPPs that reach financial close. They also play a role in risk insurance provision and credit enhancement. And we see these measures remain really, really important throughout the region. So MIGA now has at least 36 power projects across Sub-Saharan Africa on their books. 11 of these are in South Africa, which is concerning. There's also the Regional Liquidity Support Facility, which is covering payments for projects in Burundi and Malawi. And a lot of this is being triggered by the threat or the actual implementation of renegotiations of contracts, power purchase agreements. Most prominently in Ghana, Kenya has been making similar threats or overtures. There's been speculation about that in South Africa, although nothing official has come of it yet. but that really undermines investor confidence and keeps reinforcing the need to go out into the market and find political risk insurance to cover these risks. It also reinforces the importance of power sector planning, which I'll talk about a little bit later. Another really important and interesting trend is that we are seeing significant growth in large-scale commercial and industrial tenders or installations. So Kenya had a recent one, 1 megawatt one, but South Africa has seen really significant growth in this area. And so most of the mines, but also several other industrial clients are now going out to the market to procure mainly solar PV as a competitive source. And this is a trend that's going to continue as Eskom struggles to keep the lights on, as power costs increase. And then just finally, there were quite a number of auctions that were still announced in 2020, even in these difficult circumstances. The thing to note here is that, I mean, some of them were actually able to reach kind of close or at least award projects. Many of them have not been able to do that. And I think, or there were delays, and we're seeing something along these lines, I think, play out a bit in South Africa. But there are, it is indicative of a bigger trend in the region. So let's just quickly talk about auctions before we go on too long, because I think I tend to use the term without always defining it properly. So when a government is going to buy power from an IPP, they have basically three options. They can directly negotiate the contract with the IPP. That's normally a long process with limited transparency and generally ends up with prices that are higher. The other option is for government to set a tariff, a feed-in tariff, and this is normally for renewable energy projects specifically, and then developers come to government saying we can sell you power at this tariff, and they basically sign the contract on those terms. And so this is an administratively set tariff. The third option is where you introduce competition, and this is competitive tenders or auctions that I refer to. ICB just means international competitive bidding, but it's effectively where you ask parties to bid mainly on price, also perhaps on other parameters, and that's been interesting as a trend to follow. So most countries in the world have now used an auction to procure renewable energy, or at least announced that they will be doing that. It seems to be the de facto way of procuring new capacity from renewables. And it's mainly because it's been able to capture the significant cost reductions in equipment, but also other parts of the value chain for renewable energy. So it's not just a global phenomenon, it's specifically also happening in Africa, in Sub-Saharan Africa. We've seen auctions announced in at least 28 countries, and a lot of new capacity has been awarded in this way. South Africa is probably the most prominent example of that, and is the one that really sparked the innovation and the spread of this mechanism throughout the continent. So let's just quickly discuss some of the strengths and weaknesses of auctions. So in terms of strength, as I mentioned, they're really good at discovering prices, basically showing government or at least revealing to government or the procurer that these are the real costs of a project through the competitive mechanism. They increase transparency of the procurement process. They enable government to use scarce resources, often, for example, sovereign guarantees, for the best projects by forcing projects to compete. There are usually shorter timelines with regards to how quickly projects get built after being awarded. Part of the reason for that, and that depends a little bit on how the auction is designed, but is because government often has to think through many of the issues that actually end up delaying project implementation in other procurement methods. For example, issues around permits, issues around regulatory caps. And then finally, it is a proactive method of growing the power sector versus what we have seen in most sub-Saharan Africa as a reaction to what's often emergency situations where there isn't enough power, and the country tries to then quickly negotiate new investment. Some of the weaknesses, the transaction costs can be quite high. I'm saying relatively there because it can and often is offset by the relatively low cost of power. There is a risk that everything that is bid is not built. That's a risk that we've mostly seen in Latin America and Europe. So far, the African auctions that have been concluded have actually seen projects built, at least in terms of how much things depend on the private sector. But part of the reason why you might see that is because bidders might just be putting in unrealistic pricing. They can lead to market concentration and dominance, and then the low competition levels, like we had seen in the first round of South Africa, can lead to high prices. Okay, so now we understand what auctions are somewhat, and we understand what some of the strengths and weaknesses are. Before we talk about South Africa, I just wanted to quickly touch on a few basics. We were talking about previously why IPPs are in specific countries and what determines the success of a country's IPP ambitions. So there are generally two sets of factors that we've identified through our research that determines success, right? They're country level factors and project level factors. Country level refers to stable country context. Often you can find a lot of these country factors kind of captured in a credit rating, a sovereign credit rating. It refers to the fact that there is clear, consistent policy and regulation that sets out the different roles of the players, role players in the sector, that makes clear what the utility does, what the private sector does. And then finally, there's a plan, a coherent, least cost, rational, frequently updated plan, and that gets translated in a timely manner into competitive procurement windows. So from a country level perspective, these are some of the main factors that tend to accelerate investment and ensure sustainability. From a project level, you obviously want the right equity investors, the right sponsors. You want affordable debt, preferably local debt, to protect ratepayers from the currency going up or down. And then you want to secure an adequate revenue stream. And that normally means you want a credit-worthy off-taker, which is often the utility. You want bankable contracts that have been tested with lenders and where the provisions are seen to be fair, where risks are allocated efficiently. And where there are gaps, or where, for example, the utility is not creditworthy, you need some form of risk mitigation cover through sovereign guarantees or multilateral insurance products, etc. So these are the kind of country and project level factors. But then an auction kind of comes in between and tries to combine a lot of these factors into a program. And so that gets captured in two ways. The first is how the auction is designed, and that talks about like what is being auctioned, who can participate, how we decide who wins, and then the risk sharing provisions. The second part of the auction is I would argue almost one of the more important parts, which is how it's implemented. And that's about who is implementing the auction and what is the process. And effectively, the main thing one looks at here is does the private sector trust this program and trust the implementing authority? So let's look at that a little bit more. In the case of REAP, the South African program, there's been, it's been a success story that's been talked about often. More than 6 gigawatts procured in about 4 years' time. Prices were high, but they've come down significantly in the later rounds, kind of below what one would expect if you were looking at the levelized cost of electricity, and completely in line with regional trends. Had a really high realization rate of procured projects, so we didn't see that issue of projects being awarded then actually not being built. However, we haven't, as everyone knows, we haven't had any procurement since 2015. The expedited round was effectively cancelled. The small IPPs are still languishing in uncertainty. And there were these significant delays in signing the power purchase agreements for bid window 4 projects. The result has been a loss of skills, an exodus of really, of people that have built up their capacity in the country and had to leave, but also companies. We've seen a loss of manufacturing capacity in the renewable sector, my argument is that the biggest loss has been the loss of trust, and that's something that's going to cost us. So the new rounds that have been spoken about, they're not necessarily officially announced, although the president has spoken about it. The ambitions are massive, right? To have 3 rounds equaling 6.9 gigawatts in the next year. That's really encouraging. When we look at the project pipeline, there's probably enough projects that have been developed to meet this goal and to ensure that there is competition in the process. And there's, I think, enough capital in the market that has not been deployed that would be available to kind of keep cost of capital low. Question marks, I think, around this ambition is the capacity to implement it. So, and this refers to several sectors. The one is the IPP office is obviously, needing to first finalize the risk mitigation programs procurement process, which needed to have been announced already in February. And the office has a lot on its plate, but the advisory sector in South Africa, the financial sector, all of these sectors that are pivotal to the program would really be stretched to meet these ambitions. The second is local content requirements. Is something that we haven't really seen a lot of clarity on yet, and that seems to be keeping back the rolling out of the program. Grid capacity might not be a problem in the first round. It might be going forward. So let's I'll talk about it a little bit more in the next slide. But just to note that if we want to procure close to 7 gigawatts in 1 year, that is going to be a significant challenge. And then, the issue of reforms at Eskom level, also potentially at municipal levels, are going to impact and already impacting the program, at least the lack of progress on these reforms. That necessitates the ongoing provision of sovereign guarantees, while the fiscus doesn't necessarily have the space anymore to do that. And then there's this ongoing policy uncertainty that we've seen, and that's characterized the sector now for the last at least 6 years, if not more, and that we see conflicting statements from government and from many of the key role players that makes it very difficult for investors to adequately plan and price and develop their projects and their pipeline. So what are some of the key reforms needed, I think, to get REAP up and running and ensure its sustainability? So the first is we absolutely urgently need to implement the next round of procurement for the sake of the country's energy security, for reasserting our role in the global investment environment for renewables. The second is that we need to deal with Eskom and the issues around Eskom. So the unbundling of Eskom is a really urgent reform that has now been delayed several times. But there needs to be an independent system and transmission operator that is able to procure power on a least cost basis from both Eskom and IPPs, and that will be kind of unburdened by the debt that's sitting on the generation side. And that will actually strip out the need for a sovereign guarantee. We still need to deal with the debt situation itself, and that requires much longer conversation, and we can talk about that at some other stage. And then effectively the transmission strengthening component is key, as I've already alluded to, and requires increasing investment, something that the independent transmission system operator will be able to do if it is spun out as a state-owned independent entity. Second issue is we need to talk about this planning issue in South Africa. We have a very rigid planning framework that in a sense was key to unlocking the renewables program, but has now become a brake on investment. And because the plan is so rigid and is not indicative, it has become caught up in a lot of political economy processes around the future of the energy sector. And I think going forward, we need a way of stripping out the political process around planning, making it much more indicative, but also making sure that the planning and procurement link happens much more automatically, that it gets translated into procurement rounds on an annual basis without needing, for example, ministerial determinations with NERSA concurrence every time the plan needs to be translated into procurement. And we see this happening kind of globally, especially in Latin America, but many other regions have been able to show us how to do this. Another issue is we need to plan for this just transition that's happening or that needs to happen. At this stage, it seems like it's just a transition. There's not a lot of planning. And I think unless there's clear planning and clear leadership from government in terms of steering the transition from coal, from fossil fuels to renewables, it will not be just. And that's a key missing component, I think, at the moment. And what my worry is that I think in the end, a lot of this will be expected from the IPPs that are bidding in terms of what they need to deliver, which from their perspective is really limited in terms of what single projects or even single developers can do in the face of the challenges involved. Okay, risk mitigation options. As I said already, sovereign guarantees, the space for ongoing provision of sovereign guarantees is limited. There are lots of other possibilities. Many other African countries have looked at other ways of mitigating investor risks. Letters of credit, support letters, getting around these escrow accounts. There are many options we can explore in South Africa. We haven't really done any of that. So that's an area that we can look into much more. We can also, I think, pull in development finance institutions and their risk mitigation provisions much more effectively, as we've seen, for example, in Namibia. Then our localization strategy needs to be informed first and foremost by an industrialization strategy. And that's unfortunately been one of the big disconnects in the REAP program. And which is why, one of the reasons at least why localization and local content has not translated into all of the manufacturing kind of dreams that we had. I mean, the other bigger issue here remains policy uncertainty. And so localization remains an issue that needs to be thought of much more strategically, and we need to really engage with global value chains for renewable energy technologies much more actively to figure out where it is that we have strategic, where we are strategically well positioned to benefit and play the role as best possible. Okay, and then this issue of maintaining trust that I've alluded to again, absolutely crucial. The IPP office had for many years built the program in such a way and rolled it out in such a way that it was able to build and maintain the trust of the market. And I think it says a lot that a lot of the market and a lot of the big players are still in the country, that they have kind of anchored themselves to that trust. But that can be broken down and lost very quickly. And I think we are in danger of doing that. And then just kind of finally beyond REAP, I mean, there's obviously lots of other things that can be done to address our energy security concerns and unlock investment, create jobs. The one is to increase the licensing exemptions to 50 megawatts. That's been spoken about often. And then other is just to provide much more clarity around municipal procurement, and how that will work with regards to the national level, how municipal procurement interacts with, for example, the different acts managing or that are involved, like the Finance Management Act. Also clarity around licensing exemptions. Does this only apply to self-generation or not? What are wheeling charges? Having a very clear sense of when these apply and how the approval processes need to proceed. So all of these regulatory kind of reforms are needed to unlock distributed energy generation investment in the country, which has a significant pipeline that can come online quite quickly. So in conclusion, I have 3 main points. The first is that auctions like REAP thrive in a predictable environment. And for that, we need the planning processes to be clear, to be rational, to be less rigorous or less rigid in terms of their prescriptions, possibly. But more than that, we need policy certainty. And that is, that's something that's unfortunately quite lacking at the moment. Secondly, in auctions, there are always trade-offs. For example, higher local content requirements are going to mean that we end up paying more for power. And I think we need to be clear what these trade-offs are and how much it's going to cost us. And at this stage, we don't. These are trade-offs that are being decided on with very little evidence. And I think we need to, make a real effort to understand what we are deciding on, because these are really important decisions. They're policy level decisions, but they are effectively impacting the entire country. And then lastly, we need to remain committed to building and maintaining trust. And I think what we've seen in IPP programs across the continent is that trust is really easily lost. And that the moment you start tweaking the rules or kind of dismissing them, you lose this one issue that is really key to driving competition and to maintaining investment momentum for the country. And it's not like we are the only investment destination for many of the investors and developers that are investing here. And so, maintaining trust is a core value that we need to maintain throughout the rollout of the program. Thank you very much.